Good day, Money Masters and Treasure Hunters. Welcome to the July 5th TGIF Fantastic Friday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for one more session here. Tom will be back with us on Monday. He is recharging his batteries. Hope that everyone out there had a terrific 4th of July celebration. If you missed the fireworks, well, all you had to do was just look at the markets today because they had something for everybody. A true trader's paradise. Something for the bulls, something for the bears, and that includes intraday. You know, today no different. It's been like this for really the past 6 weeks or so. We had the Dow finish up 147 points, S&P up 16, NASDAQ up 35. How about the King? King dollar up 122 ticks out there. Gold back $32, silver back 88 cents. Light sweet crude up almost $2, $1.98. For those of you not familiar with me, I kick things off for TFNN each morning, anchor the 9 to 11 o'clock hours out here, and it's always an honor to be able to call the markets at that time of the day, to utilize a whole set of tools, whether it's lightning bolt patterns, A to B equals CD, Gartley, butterfly, Fibonacci, expansion, retracement patterns out there. If you've not been able to catch the show, those shows are archived on Channel 9 and Channel 10. Beauty today, just go listen to the end of today's show on Channel 10 out there. The market, I'm going to show you what the market was doing intraday. It was coming down right into an area of support, and then I said, okay, it looks like the market will bounce from here because that support should hold. The market was oversold at that time, and I said, looked like the S&P ES Mini should close out around 1622. Got up to 1624 as we came into that 4 o'clock close. Right now at 1626 out there. I also have a newsletter service called Mastering Probability. It's out each morning by 8 a.m., covers all the markets, futures, Forex, commodities. If you have not had a chance, or even if you have had a chance to test drive it, this weekend is it's the end of our special out here at TFNN. You can test drive that service 2 weeks, absolutely free, no charge to your credit cards, anything like that. So take advantage of that, as well as go to the homepage of TFNN.com and check out my free special report, The Trend is Your Friend Until It Changes. You absolutely want to download that. I'll update you on a little trading strategy that I have developed utilizing the tools contained in there. Pretty amazing results. But we'll talk about that a little bit later on. Folks, this show is not about me. It's all about you. Our call number is 877-927-6648. Give me a call. We can absolutely take a look at your stock, anything that you would like to. And I do treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools in order to lead an inspired life. Because leading an inspired life, folks, that is something each of us must do. So let's go take a look at one of our tools. This is the tool I call We Fear What We Do Not Understand. You know, all of our fears can be overcome if we deal with them properly. Fear, well, it's just an emotion. And since our emotions come from within, it means they only have the strength that we allow them to have. Think about that. They only have the strength that we allow them to have. You and I, we enjoy this tool called intellect. And it is our intellect, not our emotions, that must be our guiding force if we are to know happiness. Emotions, folks, they're simply the color of life. We would be dull without them, but we must control our emotions, or they will control us. And fear, that's the granddaddy of all emotions. If allowed free rein, fear will create nothing but trembling shadows. Don't live in the shadows, folks. Instead, look up, take a deep breath, and take in those beautiful, gorgeous blue skies, even if it's cloudy up there, because those clouds will soon blow away. We fear what we do not understand. Well, let's go try to understand these markets out here. Let's start off with the S&P 500, closing out at 1631.64. If you're watching us on Tiger TV, what you see out here, you see the S&P 500 chart. You can see that it ran right smack dab into this downtrending line out here, coming right off of the right into it, coming right off of that May 22nd high, 1687.18. You can do this on your stock charting service as your next touch points. Go ahead and hit the June 18th high, 1654.19. Just draw a trend line. The S&P 500 closed right into it. Now, what it also did today is it closed the gap. That's a gap we've been looking at for quite some time here, last week or so. That was the gap created on June 19th. The low of that gap, 1628.91. You closed up inside it. What does it say? It says, number one, that the S&P could go up and finally hit and tag the other trend line, the one coming off of the November 16th area that it broke, and it broke with conviction, with volume, and so forth on June 20th. And so it's either up against, right now, it's either up against the resistance area where we're going to see a reversal, or what I think is more likely to occur now is we'll see a little bit of a spike up to about 1638. You're at 1631 in the S&P 500 right now. That will go ahead and tag the 0.786 level. It'll also have the opportunity to go tag that a trend line that takes you all the way back to November 16th. If you take your chart, go back and touch the bottom of the November 16th low, 1343.35, make as your next touch point the low on December 31st, 1398.11. You'll be able to see that trend line that it is trying to hit. You want to talk about reversal candles in the SPYs and the Qs and the IWM, in the diamonds, it was all about the hanging man. You know, the hanging man, they say it's a bearish candle, but I don't think so. In fact, let's go over and take a look at the SPY here right now, see what it did. We'll take a look at the volume inside the SPY. Today's volume inside the SPY, 118 million, coming into the downdraft that had 321 million. All that the SPY is doing is getting back to the area where it broke down. We teach you how to buy breakouts, and what we teach you also how to do is to sell breakdowns. That is what the SPY is doing out here. Didn't get up completely to the low of June 19th. That low, 163.38. The intra-session high almost closed at it, 163.08. It closed at 163.02. That is what they call a hanging man candle. And it is, in most textbooks, it's considered to be a reversal candle. But does that candle look bearish to you? Nah, it really doesn't. If it was a hammer candle, it would look very bullish if it was back down at the lows. So I don't consider that candle at all to be bearish, even though that's what the textbooks, I would throw that one out of the textbooks and say, not a chance out there. Let's go, as long as we're here inside the ETF structure, let's go take a look and see what the rest of them did here today. Another hanging man here in the Qs. The Qs getting very close to closing the gap from June 19th, that low, 72.68. 43 million shares is what was done on that breakdown session. He did 28 million shares today. The real volume it's going against is the downdraft of 60 million shares from June 20th. Nothing more than a light bounce than the B to a C of the large A to B equals C down. The retracement level, the 0.618 retracement level, 72.73. Looks like the Qs should be able to hit that on Monday morning, sometime on Monday. Let's go take a look at the diamonds. Let's go see what the Dow diamonds did out here. Also another hanging man candle, and the Dow diamonds look like they actually did close the gap. I had just missed, but in the last few minutes of trading, looks like they got to it. The gap, the bottom of the gap, June 19th, 151.05. You got up to a level here of 159.09. You rejected that area. That's a failure of a breakdown session on volume and on price. 5.4 million shares today, going into 9 million shares from June 19th. But really, folks, what it's going into is 14 million shares. That's the downdraft day from June 20th out there. Let's finish this up. Let's actually take a look at the retracement from the high, May 22nd. Down to the June 24th low, just slightly higher at 151.33 is the 0.618 retracement. Maybe it's got a little bit more in the way of its legs just to go ahead and complete that pattern. But basically, the pattern has completed here. Now, what you're waiting for is a bearish reversal candle. And unfortunately, today's hanging man is really not one of those. That is not that's a bearish candle, okay, but it is not a reversal candle. No two ways about it. Let's go take a look at the IWM, Russell 2000 out here. Today, it's up with 29 million shares. That 29 million shares going into that May 22nd swing point that has 68 million shares. Didn't get up to the top of it, 100.38. It looks to me like the IWM is going to want to spike that level. You got up to a high today of $99.75. So that's what's going on inside our ETFs. Let's go take a look at the King here for a moment. King dollar up big, taking out the swing point high from May 23rd. That level was 84.60. You closed at 84.71. A little light on volume. You would expect that, right? 61,000 shares on May 23rd. Today, doing 50,000 shares. Our call-in number, our call-in number is 877-927-6648. Don't forget, folks, last weekend, to go check out my newsletter service, Mastering Probability. And, one of the things that it includes is about 30 hours worth of video education. So if you're trying to learn about these markets, you want to understand some of these patterns, it's all available to you there, and there's no cost, absolutely no cost. 877-927-6648. We'll be right back, folks.